Welcome back to Trades and Gains, people, and what a day on Wall Street today. The Nasdaq is ripping, the S&P 500 is back above key levels, and big tech just lit a fire under the entire market. We've got options flow going bananas, Google crushing earnings, and Intel doing, well, the exact opposite of that. Let's break down what's really moving the market and what smart money is doing about it. So let's go. To kick things off, let's look at the scoreboard. We saw the Nasdaq leading the charge today, nearly up 2.8%. Its third straight green day. The S&P 500 gained over 2% on the day, and the Dow even made its own little respectable 1.2% gain. Now, what's behind the move? First, dovish commentary from Cleveland Fed's Beth Hammack. She hinted at a rate cut on the table for June if the data is quote unquote clear and convincing. That's something that absolutely lit a fire under the rate sensitive names. Second, earnings, baby. That also helped. We had Google, the parent Alphabet, smashing those estimates today. They tacked on a $70 billion buyback and even raised its dividend. Intel also beat, but they did have weak Q2 guidance, and that sent shares tumbling after hours. Now let's talk about Google's earnings today, because that was a killer report, folks. EPS came in at 281 versus 201 expected, and revenue was at $90.2 billion. They topped advertising expectations and showed strong cloud growth. Shares jumped more than 3% on the news. Now Intel, good Q1, ugly Q2 is basically the headline here. Revenue guidance came in below estimates, and they flagged macro uncertainty. Shares dropped more than 6% after hours. Now, here's where things get a little interesting. Let's head over to our partners and favorite options tool, Investor Central Club, where we're still running that amazing deal where you can get your first month of Investor Central Club for only $25. Use that code 125 at checkout and your discount should be applied. But anyways, let's go ahead and dive into this like some butt cheeks and see what is going on with Investor Central Club. So first things first, I'm the realist. Just kidding. Let's kick this off. We had Tesla. Over $78 million in total inflow with $8 million in calls against $69 million in puts. Our most popular contract here was that Tesla 165 with four golden sweeps. And we can see that they were moving quite nicely. $5.95, $6, and $6.15 were the averages. That was hit about 17 times, by the way. So yeah, very popular contract, let's say. And this is what it looks like without the big money. Now, SPY, we also had some mixed signals here. We had 74 million in flow, but 30 million in calls against 43 million in puts. It's weird because the market is ripping, but we're seeing all of this downside expectation. Now, let's go ahead, and a lot of these were 0 days for today as well. Very interesting. Very, very interesting. Now, moving on, let's look at QQQ. We had 32.35 million, 13.1 million into calls against 19 million into puts. And this was skewed bullish, but had more call hits consistently. It was weird. We also had Google, Apple, and Nvidia all seeing heavy call sweeps throughout our action. Now, looking at our dark pool segments, we can see that VU, we had a big block of VU at the $501 spot for $320 million. QQQ saw $227 million at the $454.76 spot. And we had IWM 192 million despite the heavy bearish flow of $21 million in puts against 25 or for the 25 million in overall flow. We also had Bill.com 306 million in the dark pools. Yep, short-term treasuries, money's definitely rotating. Big blocks are signaling a rebalancing flight to safety, but also stealth accumulation in tech. So it looks like tech is making that comeback, is what we're seeing in the dark pools. Now, let's not get too crazy because we still have some things that we're going to be looking at. Goldman cut Q1 GDP forecast down to negative 0.2%. Mind you, we were just at 0.1 the other day. Durable goods orders were front-loaded pre-tariff. Mortgage rates stuck near 7%, and affordability is absolutely cratering. Airlines, staples pulling forward guidance equals demand weakening. We've got a rally, but it's on very, very shaky ground. So here's the game plan, folks. Let's play the tech momentum short term, but protect the downside. Watch for further confirmation on rate cut odds into June, and keep a close eye on earnings from Apple, Meta, and Amazon next week, which, hey, maybe I'll do some breakdowns for y'all. Levels to watch here. S&P 500 resistance is near 54.40. Tesla, we are seeing a bullish breakout above 265, and QQQ needs to hold 455 plus with volume. That's your full breakdown for today, folks. If you're watching this rally, don't do it blind. Follow the flow, respect the tape, and keep your head on a swivel, or it's gonna get cut off. Smash the like button, drop a comment. Are you riding the rally or fading the rip? And subscribe if you want real market intel without the fluff and stuff. See you guys in the next one. Love you all.